It's time again for Talking Trade, sponsored by MMAC's World Trade Association and Michael Best Strategies.
Welcome to another episode of Talking Trade. I'm Sandi, Siegel, president of MEJ.
And I'm Ken Wasylik, managing director of EM Wasylik and Associates, a international business development company. We're really happy and pleased today to have on our show Kurt Bauer, the president and CEO of Wisconsin Manufacturers and Commerce. The WMEC is the largest business organization representing thousands of Wisconsin businesses, and is a combination of the Wisconsin Chamber of Commerce, the Wisconsin Manufacturers Association, and the Wisconsin Safety Council. So Kurt, it's great to have you on the show. Welcome to Talking Trade.
I'm excited to be here. Thanks for having me.
Great. So why don't we start off just looking at the general climate of businesses over the last 4 years have been really difficult for not just Wisconsin companies, but businesses across the United States on a whole host of fronts, as we can talk about all day long, whether it's supply chain or labor shortages or remote working. Now that we're a couple of years out of the pandemic, what are some of those lingering or maybe new challenges that Wisconsin businesses who export their services and products globally are challenged today?
Well, you covered some of them already, and it depends on the company. It depends on the sector that the company's operating in or the subsector. And it also depends on what product they're selling, but there's not really a one size fits all. We are still seeing a hangover effect from COVID. Supply chains for some are still tangled, but most have solved that problem. Most of our members are telling us that they have resolved the supply chain challenges. Inflation, however, I still blame on COVID because of the trillions in government stimulus that was pumped into the economy. So inflation is a big deal right now. We're hearing a lot about inflation and interest rates being a challenge. You mentioned workforce. The biggest challenge we have here in Wisconsin, I think probably in the Midwest, is the fact that the demographics are just not favorable. We have not been at replacement birth rates for quite some time. And just to put a fine point on that, we're hearing increasingly that businesses in Wisconsin are deciding to expand outside of Wisconsin as opposed to expanding here because they need a long-term pipeline of workers that Wisconsin simply can't supply. So that's a major economic challenge, and maybe we can talk a little bit more about that. The global economy isn't great. We're not in a recession, but there is a tremendous amount of uncertainty. I was looking at some forecasts for the global economy, and they were showing some signs of weakening. Still, it looks like we'll be in positive GDP globally. It's not great, however. And then geopolitically, there's a lot of instability. There's a lot of impediments, I think, to trade. You look at what's going on between Israel and Hamas. I think that has a minimal impact overall on trade. But what's going on in the Red Sea with the Houthis in the Suez Canal, that's a major shipping lane. That's a big deal. That's one of the reasons why the U.S. Navy has got its largest engagement since World War II to keep that shipping lane open. Russia-Ukraine is having a minimal impact, but if that expands, that could be a big deal. The Indo-Pacific, we're watching that very closely. China militarizing the South China Sea, that has a big impact. Taiwan, obviously, the big chip manufacturer, that's a big deal. South Korea, China, that's not in the South China Sea, that's the Yellow Sea, but that's the Indo-Pacific. So there are some significant challenges and headwinds to global trade right now.
Well, yes, there are, and you touched on quite a few in your brief response, and that is, it all gets down to uncertainty, and I agree. All of that is making freight rates and transportation, and it's still a strain on supply chain
and insurance rates for shipping.
Yes, yes. And again, it's everything going on geopolitically is affecting supply chains again, and and trying to forecast. So let's talk about tariffs, in relation to all of that. And part of that came out of the pandemic and trade wars and so forth, and we're already 5-6 years into trade wars. Some have been resolved, but most haven't. And now we have additional, trade tariffs on goods coming from China. Some of that obviously impacts manufacturers here and raw materials and steel and aluminum tariffs, et cetera. But then we've also got all the retaliatory tariffs, right, on the export goods. So where are we? Again, I know a lot of manufacturers have reacted, right? Changed, sourcing and tried to shift some of their supply chain and their inputs of goods. Where are we today in addressing some of the tariffs, and how badly does that continue to impact manufacturers here?
Well, you're absolutely right. There's been a lot of reaction. We've certainly seen a lot of Chinese companies trying to bypass the tariffs by playing some games by where they do final assembly outside of China. So there's a lot of that taking place. Bottom line is that tariffs are a tax. They always lead to some sort of retaliatory tariffs. You mentioned trade wars. They ultimately lead to higher costs for consumers. We support free, fair and reciprocal trade, but we haven't been getting that with China. And you referenced the Biden tariffs. We don't really have good information from our membership on what they think of those. We've got an economic survey out right now, so I'll have data probably in a month. But the Trump era tariffs surprised us. We came out against them right away. Then we surveyed our membership, and we found that 53% of our members said that they were somehow adversely impacted by them. But a surprising 78% either strongly or somewhat supported the tariffs because they were tired of Chinese bad behaviors, the forced tech transfers in exchange for access to their market, IP theft via industrial espionage, currency manipulation, dumping. And then, of course, most recently, we've seen an awful lot of protectionism of Chinese-owned companies in China, where, of course, it used to be that the Chinese government would really encourage foreign investment. Now they're harassing those companies and trying to hobble them. So I don't have real good information right now on tariffs. They're obviously having an impact, and ultimately it's driving up the cost of products.
Right, and as you say, affecting consumers. So, from my perspective, there are no winners in the trade wars, and beyond China. All the European steel and aluminum, and that is the input for so much finished goods. So
you're right. You're absolutely right.
It's interesting. So let's try to find some brighter sides in trade and manufacturing, because some of this is, again, uncertain and disrupting the market. What are the opportunities, and what kind of things do you see that you're working with Wisconsin businesses on to grow business internationally?
Well, I think we have a tremendous opportunity. We're a big manufacturing state, 20% of state GDP. We're also a big agricultural state. So we make stuff, we grow stuff, we process things, and we ship them all around the world, and we want to do more of that. Canada, Mexico, China, and Europe, specifically Germany and the UK, are our biggest trading partners right now. I think the easiest thing to do is expand relationships. That's typically what you do in business. When you want to grow your business, you expand the relationships you already have. I think that's probably the easiest thing to do because we have trade agreements with those with Canada, Mexico, USMCA, certainly with the EU. But longer term, you have to go where the population is growing, and that's Africa and Asia. The problem is we've got challenges there. I already talked a little bit about the challenges in China. China is a big part of Asia. Of course, India is growing population and is the youngest population, I think, in the world, certainly in Asia. Africa lacks political and economic stability. They have not seen the kind of industrializations that Asia has experienced. As a result, they don't have the middle class wealth that Asia has. So there's opportunity, I think, in Africa longer term, but there has to be some changes as well. So there are opportunities. Again, big manufacturing state and agricultural state. There's opportunity to sell those products abroad.
Absolutely.
I mean, these are always great opportunities to look at new markets with growing populations and, of course, growing disposable income, especially on the consumer product side. I mean, if you look out a couple, 2-3 years, how do you see Wisconsin businesses growing? You talked about the tax, the
Trump
expiration, expiration of many of those tax relief what do I say, credits and lower tax rates that's coming in 2025, I believe. How do you see it over the next 2 to 3, maybe a little longer, for Wisconsin manufacturers, Wisconsin farmers, and then probably expand it to the Midwest, because we're such a big part of the Midwest economy.
Right. Well, I think we control our own destiny in the United States. I think we have a lot of things going for ourselves if we are willing to take advantage of them. Just current economic conditions, I call it a bipolar economy, good news one day, bad news the next. Although the overall metrics in the economy are pretty strong, GDP growth is positive, unemployment rate is low. I do think that has more to do with the demographics than it does about the economy. We had a WMC board meeting not too long ago, and one of my board members said, we're not in a recession, but we're in something. And that was met with a lot of smiles and head nodding. So something's going on. I think, like I said, I think going forward, we control our own destiny. We've got to address some issues. You mentioned the tax reforms that are expiring next year. There's the old axiom, capital goes where it is welcome and stays where it's well treated. We want to make sure that the United States does that. We were at 35% tax rate corporate tax rate before the Trump-Ryan reform. It's currently at 21%, which is below the global average. Trump wants to drop it to 20%, which is what WMC would support. I think you could make an argument for even lower than that. Canada's at 15%. Ireland is at 12.5%. Biden has said that he wants to move it back to 28%, which is above the international average. I think that would be bad for business. On the regulatory side, we have seen an explosion in regulatory costs. The National Association of Manufacturers calculates that it now costs U.S. businesses $3.079 trillion. And I did say that right. That's trillion with a T, to comply with federal regulations. That's equal to 12% of U.S. GDP and more than the entire manufacturing sector's total output. In fact, that's larger than all but 6 of the world's largest economies. So we're really hobbling ourselves with that kind of cost. Immigration reform, that needs to be addressed in the new Congress and with the new administration or the next administration. And, we need to secure our borders. We need to vet guest workers. And we need to do what we can in order to address that workforce shortage, and immigration has to be part of it. The other thing I'll mention is energy, because we control our own destiny there, to be sure. We were energy independent. It's the lifeblood of business, particularly manufacturing and agriculture. And as we head towards decarbonization of the grid, we have to do so responsibly to make sure that we keep the prices relatively low to give our businesses an advantage.
Well, that's a lot to swallow there, Kurt.
Yeah.
We're trying to wrap it up in 10, 12 minutes here on this short podcast here. But
an incredible job of sharing all that and really giving us the highlights of all the pulling dynamics. And again, all that leads to some of that uncertainty in what lies ahead. Thank you for all the work you do. And thank you, Kurt Bauer, for joining us on Talking Trade.
Sandi, Ken, thanks so much for having me.
You've been listening to Talking Trade, sponsored by MMAC's World Trade Association and Michael Best Strategies.